Thank you for joining iMeet. When you hear the tone, you will be the 26th person to join the meeting. Now being recorded.
Hey everybody, good afternoon. This is David Blake with Tuesday Tech Talk. And we're going to quickly review the last couple of days in the market, kind of figure out what's going to happen here over the rest of the week. And what we'll do after that is I generally talk about 20 or 25 minutes, and we open it up to some questions. And you can ask about anything from individual stocks, targets on the different indexes, or anything else on your mind. And today we're going to talk a little bit different than what we normally do, and I'll go into that in just a few seconds. But let's take a look at some of the regular industries right now. You're going to see some different markings on the charts if you're a regular here. Okay, we had a market that surged to new highs again last week. The Dow Jones was up for a seventh straight week. And on Friday, the S&P 500 and NASDAQ hit record highs on that FANG melt-up, as we came in with big moves up in Microsoft, Apple, Amazon, Google, even Facebook was part of it. We are seeing some carryover of that. I think Facebook comes out with their earnings, I believe, tomorrow. I'm not sure. So we could get another pop on that. We'll have to see what's going on. But first, let's take a look at the Dow Jones. If you read the weekly market letter, we go down to a positive +6. That's going to stay in bullish territory. Index, which is based on our cycles as far as what we determine periods of strength and weakness in the market. The momentum index was unchanged last week at -1, which is neutral. What that tells us is that the Dow Jones is outperforming every index except the transports and the Russell 2000 over the last, say maybe 30, 40 days. We had some pretty big moves on the transports and the small caps going into last week. Sentiment index is still bearish -1. People are still a little bit frothy, not too bad, but the fear and greed index, the bullish investment advisors and bearish investment advisors were all at extreme levels. For the bullish investment advisors, that means that they're over 60, which has been, generally when they get over 60%, that generally leads to a pullback, not necessarily right away, but over the next few weeks it means to be cautious. We also had a difference, something we call the bull and bear spread, which we'll start putting up on the weekly market letter here in the next week or two. That tells you it hit 47.2 last week. And the last time that we had that much of a difference between the bulls and bears was 1987. So about 30 years ago, and we know what happened at the end of 1987. Everyone was a little bit too bullish. So again, some red flags are starting to come up here as we look at some of these charts. Okay, I'm looking at something here. I think I may have printed off the wrong pages here. Hold on one second. No, okay. All right, let's take a look at the Dow here first. What I want to look at over here, you can see that it's overbought, and what we're going to talk a lot about today. So I had a lot of different, some talks and some emails come in and some calls in, just talking a little bit about, when I talk in my commentary about the market's overbought or oversold, or we need to consolidate some of the gains. Why am I determining that? What determines that? What am I looking at? Does that mean we sell things here? Do we lighten up on positions? And what I want to do today is we're going to go over a lot of different indicators, and hopefully you'll get something out of this that you can use in your own arsenal when you're looking at either stocks or indexes and they've had a big move, and help you decide whether you want to sell them or whether you want to hold on or lighten up or anything. So here we have the Dow Jones, and you'll see here I use something in stochastics called the 30-day rather than the normal 14-day or 5-day even. And what I look for on this is when I get to a 95 on the 30-day, generally we're going to see a pullback. And here you can see back here in June, hit 95. We had a little bit of sideways action. We got it again over here back in August, and we actually did have a little bit of a pullback. And now we're over here again about a week or so, and we're kind of going sideways into that. Now, we have good accumulation. You also have some confirmation of some of these by the 14-day RSI, also pointing to a overbought market. We're really overbought over here, and we're going to look at some other measures that are going to tell you that it's maybe a little bit more cautious move in here than what we normally would see, because this usually don't stay this overbought for this long. Now, here's the NYSE advanced decline line, which we look at all the time. Not really any negative divergence. You've had some sideways action here, considering how the move in the market. You kind of expect with this. So today we have a little bit better. We're up about 800 units on the advancing units and about another 900 on the NASDAQ. Here's the new highs versus new lows. We have some contraction going on in this. Yesterday we're at this is 45. So less stocks punching out new highs as we're here at the making new highs, which is something you want to, just a small red flag. It's not like we're over in this area where you have more new lows and new highs. That's kind of that Hindenburg effect or whatever. But it's stopped. We were contracting here. You had a little bit of rollover, so you don't have somebody making the new lows. But just something to watch. If this would get down here below, back in the double digits, again, that would be something where it may be indicating that we could have a little bit of a pullback on that. Okay, here's the S&P 500. Again, I wanted to point out when the 30-day has hit 95. And remember, I like it when it gets above 80 on the 30-day stochastic. Usually it's a buy signal crossing 50, but at 80, that means you got a strong trend going. And back here we hit it and got a pullback when it hit 95. We had it again over here in June. Had sideways action at that point. We hit it again over here in mid-September. And we had a little bit of sideways action like that again. We'll see if with the S&P, which is actually it's lagged the NASDAQ and the Dow here lately. But we'll see if it gets back up to 95. Here you had the 14-day RSI was showing that we were overbought. All it really did was it slowed the momentum down a little bit, so you had some sideways trading. Nothing big. Good accumulation on that. Here's the that was what we just looked at. Okay. I thought I had the NASDAQ in there. Wrong chart. Anyway, this is the OEX, the S&P 100, which is the big cap index. Again, I wanted to show you you're above your upward channel over here. You hit 95 back here, and you're still going up. Those FANG stocks having a big run up again. You're moving up again here today. We'll see if we get to that 95 or not. And if we are, that probably could signal a short-term top here by the end of the week. That area. Back here in May, we had the 95 on the 30-day. We had a pullback, and then again back over here, we had the 95, and it went sideways. So I think you probably you're getting close to where you're about where our targets are. We're going to also talk about when the market's overbought, how to come up with your own targets like we do on these things. But I think you're getting very, very close to what I believe is probably going to be a short-term top. Okay, here's the NASDAQ advanced decline. You're punching out new highs over here. Of course, your last new high on the NASDAQ was on the 20th, which was a week ago this past Friday. And since then, you're getting more decliners and advancing issues going through there. And you haven't really pulled out. Well, actually, you made a new high on the NASDAQ last Friday. I take that back. But this is a little bit of negative divergence. Okay, so we're making a new high on the index. With less and less stocks going up. That again is a red flag and something you want to keep an eye on. And here's the new 52-week highs versus the new 52-week lows. Again, you're having that contraction coming in here, and it's not really negative divergence yet, but we're getting close to. Had a couple days last week where we only had double digits on the new highs. Actually, it's about 2 weeks ago when we had that. We just want to keep an eye on that. When we get this area like that, you want to make sure that that's more than just a little bit of a negative divergence. This is actually kind of a warning when you get to that. So we want to watch to see what we're doing today. We're the market's up today, and you got about 125, 130 new stocks. So we're still sitting in this area right here. So things are still look fine. I think we can still nudge our way up a little bit higher, just not being aggressive on the buy side. All right, here's the Russell 2000. Again, I want to look at a couple different things on here. This is kind of we're kind of an upward channel. We had an overlap over here, which meant it was overbought. Now we've pulled back into the channel. I think that's this sideways action over here is good for the small caps. We're going to talk a little bit in just a second about why this is going on. But here we had the 95 roll over here, the 30-day stochastic. Hit that, went kind of sideways and then down. We hit it again right here, almost hit it again right there, and we pulled over. And then we hit it over here right where we topped out here a couple weeks ago. And we've gone pretty much sideways to that. We are going back below 80 as of yesterday or today. We'll just keep an eye on this thing to see what's going on. Another thing that you can look at on your own, when we talk about, they talk another indicator that could be, is used to show an overbought market, and that's the 14-day RSI. Now, you can look at this thing at several different ways. When this thing gets up here, it's overbought, but also it doesn't necessarily mean you're going to go out and sell everything. Because an overbought market, when it's trending up, just means that this trend is really strong. Now, those stochastics that we're going to look at here in a minute too, most charting packages will use the 14-day or maybe even a 5-day, which the Smart Chart uses, which will give you a lot of different signals, which work great in a range-bound market. But when you have a trending market like this, the fact when you get overbought doesn't mean that much to you, because an overbought market and a trending market just means that the thing may be stronger than what you're looking for. But we did get overbought. We're having a little bit of a pullback here. We did hit 95, so the combination of these two in this case did lead to some sideways action. And again, we're going to talk about why the Russell's going sideways here in just a little bit. Now, here's the transports who played a lot of catch-up ball here. They were in a sideways, sideways range-bound market for most of the year. Now, this thing here, you can see when you get up here, you get your sell signal on the stochastics in a range-bound market. This was a pretty good sell signal here. Again, over here, when you got up here and you got your sell signal, again, when you're in a range-bound market, stochastic sell signals will work great. They also work good on a buy signal. Over here, let me get my pointer over here. Okay, over here you got a buy signal on this. You're in a range-bound market. That's a legitimate and a good buy signal. Your range-bound market still, you get the sell signal over here. It was a good signal when you moved down. Over here you got your buy signal. Again, it was a good buy signal. Now the problem with this is it's easy to go back in time and look at a chart like this and go, well, it's range-bound. Well, once you get over here, your first inclination is going to be to sell. In this case, a 30-day will smooth it out and stretch it out before you get that sell signal, which would be over here. And by this stage, you can go to yourself, okay, well, this is trending now. It's broken out of its range, so I'm not going to take this sell signal right here. Okay, I hope that sinks in, because, again, on the range-bound market, the stochastics buys and sells are going to work out well. Here's another one back here. You got it right here, and it worked out well. When you're trending like this, actually like this or over here, and you break out of that range, you don't rely on the stochastics to give you an entrance and an exit. They don't work, because in fact a lot of traders, when the market starts to trend like this, when it hits 80, they're going to go ahead and buy, because that means that it's probably going to break out and you're going into a strong trend. Okay, let me get over here, catch up with my notes a little bit. Okay, now what was the best performing sectors last week? For a market that was jumping out to new highs, we basically only had two sectors that were positive last week. Now this includes yesterday and today also, but we had technology, which again was your Microsoft, your Google, that type of thing. And then you had your consumer discretionary, which had a lot to do with Amazon. So for a market making out new highs, you'd like to see at least more than half of the sectors being positive for the week. This is a little bit of a red flag, meaning we're getting toppy again. The worst performing sectors last week, we had the healthcare down almost 2.25%, industrials, consumer staples, financials also backed up, but they've had a heck of a run basically following the 10-year Treasury yield, which had got up to about 2.4, I think 2.45 or something like that. Now it's backed off to 2.37, which is when that backs off, you're going to get some selling from the quick money going into the coming out of the financials. All right. We're looking at the performance percentage-wise this year. Dow Jones were up as of the close yesterday, 18.5%. S&P 500 just shy of 15%. NASDAQ having a crazy year, up almost 25%. Russell up close to 10%. The Dow Jones Transport's 8.5%. So it's a great year. The reason I brought this up is because as we're coming into the end of the year, normally you start thinking, when you start reading articles, all right, it's time for the, we have a great November and December, put that in the books, we're going to keep on going and finish out the year strong. I'd like to point out that when you have returns like this, especially for the hedge fund managers and money managers that depend on performance to bring in their clients for the following year, they're not going to take a chance right now in the last 6 to 7 or 8 weeks of the year to have the Dow Jones go down 10%, and they end up a great year like this, and they end up with 7 or 8%. This may be, I don't know if you'll know this or not, but you're going to start to see some selling in some of the professionals, because if I can lock myself in at a 20 to 23% year, I'm going to do it. Even if the market goes to up 27 or 28 for the year, if I can put in my books and lock it in and say, well, I had a 24% year, didn't quite beat the NASDAQ, but I'll take it, and I'm almost risk-free as I start unloading positions for the last 2 months. I think you're going to see some sideways action to a little bit of a pullback, and that'll be one of the main reasons, because again, the professionals want to use these type of gains for their marketing materials for next week, or next year, I mean. All right. What I want to get in here now, for several weeks, we were talking about being overbought, oversold, and that we needed some consolidation. What I want to look at is what a lot of technicians and traders do when they see that a market is oversold, like what we have right now. Like a lot of them, like we talked about earlier, are going to use stochastics. Some of them will use a 9-day or a 14-day RSI. Some traders will even use a 1-day RSI, some even a 3-day RSI. Of course, unless you're a day trader, that's not going to do you a heck of a lot of good. But that's when these guys look for when they're going to take a profit or sell on the day trades. They'll use a 1-day, sometimes a 3-day if they think they can squeeze out a 2 or 3-day trade out of it. So these are kind of things we're going to talk about for the rest of the hour. And we're also going to talk about some of the problems with these things. All right, now this is a chart of Facebook. All right. Now we have a nice trending market over here. We're going to go back and look at this because there's a lot of signals that I've marked on this chart. We want to find out what's working and what isn't. So we're going to go back here. We're going to look at this, what happens during a trending market, and then we're going to look where we're range bound here, which signals again worked out. Okay. Now we have a trending market. Again, if you're looking at using stochastics in a trending market, not a very good signal here. You had a little bit of a sideways action, and you started heading back up again. Okay, you got another sell signal. This one, you did okay, but you're only talking about making $1.50. If you came out of this position here and made $1.50, big deal. You missed this whole move from 140 up here to about 154. So on that signal. So again, on a trending market, forget about these. Forget about the stochastics. And again, if you use it when it goes over 80 to think you're overbought, you've missed all this move here. Over here, you missed from here to here. On this one here, you missed all that one. Then you got a little bit of one. You can actually go. Maybe you're in a sideways or trending market over here, so you did get some decent signals. But up here, we're definitely in a range-bound market. You had a sell here, you've been out of it. You had a sell here, you did get a little bit of a pullback, but you're still missing. You got this one over here. We had another sell. You got a little bit of a pullback, and then we break out. So we have a little bit of the next signal on this thing, on a sell. You're going to ignore it because you've broken out of that trading range. Again, stochastics aren't going to work, all right? What else do we have on here? Again, the problem with this is knowing when you're in a trading range and when you're trending. Now, in this case here, this actually was a trading range where you would have gotten the decent signals. But okay, you're trending here again, but then when you get to here, you get a breakout or not, you didn't get it. So it is tricky following some of those signals. Okay, now here's something with Apple I wanted to show you real quick. Okay, now if you look at the stochastics, if you're selling on when the stochastics go above 80 or something like that, okay, you're missing this whole trend. You're out of the stock, and okay, you can buy it over here, which was okay. Then we get another big pop in here. You get another, you're over 80. You think it's overbought here. You're thinking about coming out, but you're going to miss all of this. Finally, we get a little bit of a pullback on Apple over here. Now we start to trend again, and then the stochastic immediately moves up back into 80. If you're looking for sell signals in here, okay, you got one over here, and you're, you all of a sudden you missed the move from 150 up here to 160 or something like that. So again, when you're trending here, you ignore the stochastic buys and sells on the trend. You have another trend going on in here, right? So you have this thing here. You're going to take in this thing here when you're starting another trend up. Okay, you came out of it at 155, and now we're up pushing 170. You've missed that also. Now, what I wanted to show you on this over here, and I've talked about this on the 14-day RSI. There's a technician. Her name is Connie Brown. She's actually here in Atlanta. She has a book called Trading Analysis for the Trading Professional, which is a part of the Chartered Market Technicians course, CMT. And what she has worked on with the 14-day RSI is when the market is bullish or trending higher, this 14-day stochastic is always, and even on pullbacks, it's going to stay above the 40 level. Okay, remember that. As long as the 14-day stochastic stays above 40 on these pullbacks, you're in a bullish market. Now, over here you broke it. This is a pretty good drop over here. You've gone from 162 down to 140. This was alerting you that, okay, we may start to short this, but it came back above 40 right here. And now we're going sideways, but we're holding 40 the rest of this little sell-off period, okay? And we hit that little dip, but we're above 40. So we're kind of in question. Is Apple still bullish, or are we starting to change the trend? What you want to watch now is if the 14-day RSI can get back above 60. Okay, so in her book she talks about the 14-day RSI, it trades between 40 and 60. When we get above 60 on the 14-day RSI, that is your signal that, okay, the trend is actually going to be bullish again. As you can see, once we cleared 60, which is right here, we started trending higher, and we stayed above that. We even got above 70. Above 75 is on this thing is a little bit cautious, but that still means you're bullish. We stayed above this. We did get a little bit of a dip over here. This, it takes a pretty good pullback where we're thinking, okay, is the trend going to change? We had about 2 or 3 days. We immediately popped up above 40, and we've been able to hold above 40 in Apple again going forward. So you had 2 places over here where you thought about, okay, what am I going to do here? I guess maybe this is over. But again, you only had that signal last about 4 or 5 days. So if you did take the signal and say, okay, we broke below 40, if it gets below 30, I'm going to go short Apple. We never did get below 30 on either one of these pullbacks. Okay, so keep that in mind. If we get below 30, you can short it. The trend is changing. In this case, we were able to hold that on the Apple. So I want you to keep that in mind on those things. Okay, here was the 14-day RSI. Again, it's overbought, but a strong market. You can see that maybe you got a little bit sideways and pull back here, a little bit sideways on this one over here. And we're just getting overbought again here, but I'm not going to really worry about it too much, especially with this 30-day stochastic coming up above 80. You got to remember, what I do is when I see the 14-day RSI is overbought, as long as this stochastic stays above 80, it doesn't, when it breaks below that, you're probably going to get some sideways action. But as long as it's above 80, those two will balance each other out for me. Okay, next I want another thing I wanted to talk about. I talked a little bit about this some other indicators that will let you know when the market is overbought. And this was part of my Schwab article this week for active traders. Other things that we look at to determine, okay, is the market really overbought? This is a chart that you'll be able to get on our new smart chart in the news site. And what traders will look at on this is I want to know when I get above what percent of stocks are trading above their 50-day moving average. When it gets above 70%, active traders will take a little bit of will be concerned. That means out of all the stocks out there, 73%, 74%, 75% of the stocks are above their 50-day moving average, which means this is an awfully strong market. Now over here, when we got above, let's see, let's just go back over here on 10/6. We're really climbing it up over here. We got up to 78.1%. And now my thing is different, a little bit different than this because I do this on an Excel. But the week ending 10/6, we had 78.1% of the stocks in the S&P 500 were above their 50-day moving average. Okay, so for that week, because you were running into it, the S&P 500 was up 1.2%. The following week, you still had 78% were above it, but the market was only up 0.2%. And the week after that, we started to pull back at 74.5%, and now we're over here around 66. So the market is going sideways to this tandem. But when you get to these levels where you see a 78%, up in that level, that means that the odds are, it doesn't mean you go out and sell everything, but what that is going to tell you is historically you've probably had a sideways to maybe slightly down market. But you also have to remember this, when we talk about trending markets, if that market is trending and you have that percentage of stocks above that 70% mark, that's a really, really strong market. So again, it's going to consolidate when it gets up there above 75, but just know that. It doesn't mean you go out and sell everything, because to work off an overbought condition, you can just go sideways in the market, and that will rectify the situation on that. Okay, another thing you can look at, and again over here, here's the I put this model of S&P 500 up because back here when we were like 76%, then you did get this pullback and sideways action in the S&P 500, and up here now that we're at the 78 region here in in the S&P 500 for October, the momentum has really slowed down on this one, and we basically we're up for the month, but we're only up 25.19, and we finished yesterday at 25.70, so we're up about 40-50 points, which is about 300 points for the whole month of October, and that's because we were so overbought. You're just going to have less of less oomph behind you when you're trading that. Okay, another thing you can look at, this is a moving average channel. Okay, this is the Dow percentage going off of the 100-day moving average. Wait a minute, let me make sure of this. Okay, yeah, this is I put this over here with the moving average channel, and what this does is if you take a moving average and you lay it over these this is 50 also. I'm sorry. What you'll do is when you have something, and we wrote about this a couple weeks ago, you have something called a reversion to the mean. In other words, when you get above the moving channel like this, eventually you're going to come back into it. So when you get above this, you know that eventually, when this thing's going to turn up, you're not going to keep on going up like this. Eventually you're going to have to come back, revert to the mean. You get an overlap again like this. Again, you revert back to the mean, come back to the moving average. Once you get over, you keep coming back, come back to the average. You're over here again, which means that you're probably due to come back into the channel and maybe revert back to the 50-day moving average, which would be a little bit lower in here. So that's something you can also put on your charts. And this doesn't mean, again, that you sell. It just means that the odds favor that you're going to go sideways to maybe pull back a little bit when you see this on your own charts, okay? And now, another thing we wrote about just a couple weeks ago, and this is something that we've talked a little bit about over the last couple of years. And I've often talked about when you take a moving average like the 100-day moving average or the 200, you take your thumb and your first finger, and if you put your thumb on here and your first finger at that level, What you can do is you'll go back over here and you're going to see that you have, again, a reversion to the mean where you only get so far away from these same things. For the moving average, you'll get so much of a distance, and then it'll start to pull back. In this case, we were up over here. We got about 8% from the 100-day moving average at this stage. Okay, then we started having a big run up over here again. Okay, we got about 7.3% away from the moving average there, and we started to revert back to it. Okay, now we've stayed back in the range pretty good. Okay, we've had this big run up here again, and we got up here to around 7.3, 7.2, somewhere around there again, which means I wouldn't expect to see the market, the Dow Jones, get ahead more than 8% away from this area. And because of that, and then you can use this as one of the things I use sometimes for targets. Okay, we got as high as 8% before we had a pretty decent, sideways to pull back. If the Dow Jones can do that again, and we're still strong, that is going to target about 23,590, which would give us maybe another 150 to about 200 more points to the upside. It's going to give us on the S&P 500 a target of about 2610. Although the S&P 500 may not get there, it may get to 2600, and I had that for the target on NASDAQ was 6700 for the last couple of weeks. So I think that NASDAQ is probably a little bit extended here, and we're probably just about where we're going to top out on this cycle. So these are some things today. I see some questions coming in that I think you can use to determine when whether the market is stronger than you think it should be, and when you should take action, or or just know that, okay, I can see this thing is up almost 8%. That's not sustainable. This thing is going to have to consolidate before it's going to work its way higher. So it consolidates here, then we start to nudge our way higher. Then we're running away again. Okay, that's not going to be sustainable. We're getting close to that 8%, which is maybe right over here. That's going to probably lead to something like this, maybe going out through the rest of the year. Okay, last slide I'm going to show you today, and we'll get to the questions. CTI count, the way it's working right now, it looks like maybe within the next 10 days, 2 weeks, I would look for this consolidation period to start. Again, the market's looking a little bit toppy to me. I think you're going to get the managers coming in here and probably locking in some profits. Doesn't mean you go out and sell everything, but just know that there's probably the best chance right now is for the market here after the next 2 weeks to probably go sideways to correct. This isn't a big, we're still in a bullish cycle for the longer term. So I just think that maybe, again, this period here, we could be neutral or we could be a sell. We'll have to see what the momentum index does. If the momentum index stays at a -2 or even a 0 or a +1 or 2, then we'll just stay neutral on the market until we see the momentum index maybe fall down to like a -4 or 5 or something like that. Then we would probably get more of a correction, which could be a 3 or 4 or 5%. But until we get that, we're gonna maybe get a little bit to the upside, and then we'll just kind of sit and see what what the market tells us to do. Okay, I'm going to go ahead and get some of these questions on here. Just as far as these portfolios that we'll be rolling out next week. In the aggressive growth, we sold a stock. The symbol is STOR. We took about a 3.5% loss. We also sold TAL, which we had put in there about a month ago. We lost about 9% on that one. What was in another portfolio, though, we were up 33% on that one. But we bought BLUE in the biotechs. Biotechs have had a pretty good sell-off here. I think maybe we could get a little bit of a bounce. BLUE, we bought at 140. HCLP, we bought at 10.15, and CBI, I think Chicago Bridge at 16. So those are some aggressive small cap stocks you can look at. The value portfolio, we came out of GILD, G-I-L-D. We had a loss on that about 7.5%. We bought a French bank, BFR, at about 22. And on the growth and income, we sold Bristol Myers for about a 7% gain. We sold that TAL for a 32% gain. And we bought HEES at around 32 and change, and we bought CF at 37.10. On the small cap growth fund, we'd owned this and had about a 70% gain early in the year. We sold RTRX A little biotech came out lost about 0.5%. We bought RH at 86.64, which had a little bit of a pop. And in the sector industries, we bought PKB, Paul Kangaroo Boy. It's a building and construction industry ETF that you could buy for a sector. All right, let's take a look at some of these questions in here now. Craig, I'm sorry about the lithium stocks. I'm going to have to cover that possibly next week. There's supposed to be a pointer on the screen, then I got to it late. Yeah, I don't see it either. Okay. Can you explain more about the difference in the 14-day versus the 50-day stochastic metric? Okay, it's the 30-day, not the 50. The reason I use the 30-day is because I'm looking. Let me go back here a little bit. In the 30-day stochastic, that's a 14. Here's the 14-day here. You get a lot more signals. And on the 30-day, I'm looking more to capture the trend. And on a trend, when the 30-day stochastic gets over, here we are. Gets over an 80. You're in a strong trend. On this case here, you got up there and didn't do it. But over here, actually above 60, 50, 60, you're trending pretty strong. And you stay in that trend, even though you're going higher here. Okay, even though this thing's way overbought, this thing is keeping you in all the way through this period. Okay, and that's the 14-day may be giving you several signals in and out of here that you're overbought, oversold, all that kind of stuff. It just smooths out the action for me, and it seems to work well. Okay, that's on that one. SQ is up so much this year, but it's continuing to make 52-week highs. We'll take a look at that in just 1 second. Let me get the rest of the questions out of here. Do you think it will continue a little longer at the end of the ends? You use CTI to help you decide what to do in foreign stocks. On my foreign stocks, I stay fully invested. Only because there's some school of thought, or they're different animals. Even if we're strong, some of the foreign markets should be strong. We can be too strong; it's going to kill the emerging markets. A lot of that depends on the dollar. So I'll probably look at more of the U.S. dollar when I'm trading in foreign stocks, especially emerging markets, because the dollar keeps going up. You're not going to make any money on the emerging markets because it's going to change the cost, make the cost of commodities too high for those companies. Let's take a look at SQ here real quick. I'll try to wait a minute. Try to share my screen here. Yeah, for those that are new on this is a little bit of a different webinar than we normally do. We usually go over a lot more stocks and sectors, but I did want to show you that when we're getting up near a top or overextended, what the thought process should be to decide whether you want to start to come off some positions or hedge yourself a little bit. And as we move into next week, we may also want to do a little bit of hedging. We're going to talk a little bit about the VIX, and it may be time where we finally can maybe put a little bit of money into the VIX and see if we can get some money on that if we do have a little bit of a sideways to pullback. Okay, here's SQ. You have a runaway stock like this. There's not really much you can do on this thing. Okay, you have a 99 on the 30-day stochastic. That's about as overbought as this thing could possibly be. 86 on the RSI. Something like this, you have to determine where you're gonna what you want to do. Now that they're still buying it in here. If this was trending down, I would probably tell you to go ahead and sell it. But at this stage, as long as it's being accumulated, I would hang on to it. But I would certainly have a mark that says, when am I going to, what's my downside? I don't want this thing to fall back down to the 100-day or the 15-day. Maybe you look at the 21-day moving average, put that in there, maybe even the 10-day. But you don't want to let something like this. Another thing to do, if you've got a good easy double in this thing, sell part of your position. A lot of people don't do that. They think they got to sell it all or sell sell it. I'm all in or I'm all out. Take your use the house money on something like this. And if you have 200 shares, you sell 100, keep 100, and let the thing ride. Let's go back, see if you have any more questions in here. We got disconnected somehow, it looks like. Will, can you hear me?
I actually think it just cut out.
It just cut out?
Oh, no, I got it.
Okay. We're just trying to reconnect on this thing that happened a couple weeks ago. I'm sorry about that. So I guess that's all the questions we can get to. But again, if you have any questions about what we talked about today with the overbought and oversold areas and how to use that into your in your arsenal as far as working with the market, go ahead and email me. You can go to support@marketedge.com or go to the doc@marketedge.com. All right, listen, I appreciate you taking time out of your busy day to join me, and I hope you got something out of this. And we'll talk to you next week. Thanks again. I can't even get the stop recording going. Screen share, there's something coming on now. Cut this down. I guess let's try that. You have another one of those things where you might, this is always shutting off. All right, I'm going to go and see if I can stop the recording.
Flip.